Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, now let's take a look on gold again. Yesterday we see that market has continued with lower, as we have suggested yesterday that market, recall that we have warned you that market doesn't show any double repo patterns on the hourly chart that we have discussed yesterday, as it could seem on the first glance. That was just a continuation flag pattern and pennant, and as a result market has plunged down again. But right now market, I think, very close to the area where some short-term upside retracement could start. This conclusion is based on some moments. First of all, take a look that market stands at daily oversold. It's very close. I can't exclude that price could pass $3-4 to the downside, but that will not be drastic action as here. So market are relatively close to the area where bounce should happen. In fact, we could say that market almost stand at Jordan bullish stretch pattern. The stretch pattern is the combination of the fib support, that is the major 50% support from that low to this high, right in the middle, the 50%. That is accompanied by the daily oversold. Market stands very close to it. Also guys, market has entered in an area that we have discussed previously, an area of disrespected former confluence resistance on the daily time frame chart, 1295. Also guys, that is the 50% support of this frosting candle. Robusto candle has the very significant area, the 50% support. And finally guys, that is the former consolidation that will hold the market for the further downward action. So I can't exclude, as we said, the fluctuations inside of this area, 1290, 13 even area that we have discussed previously. That's now mostly the range rather than precise numbers. But that's an area where market should form something bullish on the intraday charts, and an area where market should start some retracement. This retracement also is logical because former momentum to the upside was not bad. It really was significant. And after such momentums to the upside, market usually shows the retracement. And this is the very good area for that. It's a combination of the disrespected former confluence. As I said, a lot of different support indicator stands right here. Also guys, take a look at market finally has hit the monthly pivot point. But since this plunge was really fast, it's a bit risky to take the long position just blindly. Besides, when you deal with the stretch patterns is the stands among weak Jordan directional patterns, because stretch patterns gives the signal against the impulse move, against the former action. It's some sort of the counter trend directional pattern, and the core of the stretch is combination of the fib support and oversold that prevents market from the possible downward continuation. That's why to trade stretch pattern is better to get confirmation on the intraday charts. For example, it could be some bullish reversal pattern on the intraday charts that could point that market is ready for retracement, and market is really forming something that could trigger this retracement. On the 4-hour chart, we see the potential target of this retracement if it will happen. That will be so-called at minimum target. I call it as at minimum, at least target, because in general guys, gold market likes to show deep retracements. That's just the feature and the habits of this commodity, And in most cases, market shows retracement to the 50% or even to the 618. So I can't exclude retracement right to the 1325. But that will be an area that probably market should reach at least. This is 3-8 resistance, 1312 from the whole move down. But what is more significant is that that is the lower board of this consolidation. As you can see, that was previously support, breakout. Market already has stopped in this area and broken into the downside. That will be the resistance if market will approach it again. And that will be the minimum upside target of this retracement. On the hourly chart, we do not have any patterns yet. As I said, we see the reasons why market could start the retracement up from this area. And that reasons are not really poor, but unfortunately we didn't get any patterns yet. And we should watch for them in this area. What patterns will be here? It's very difficult to say. Maybe market will form here some butterfly buy. Maybe some other patterns. Maybe this will be some double bottom or something of that sort. Also, guys, take a look that market in general could form here some sort of the head and shoulders, because you can see that potential head stands. This low stands at 1618 extension of that retracement. And maybe market will form here some sort of the head and shoulders pattern with the retracement right to the 1325 later, based on some A, B, C, D pattern. Why not? That's also possible. But if you would like to trade the market on the long side of the market, wait for appearing of the bullish reversal patterns here. For others who would like to trade its downside, you need to wait for the solid rally to sell into. The first destination point, if retracement will happen, will be probably at 1313 area. But I can't exclude also the possibility, as I said, that market could form some ABCD and hit 1325 as the ultimate target. That's mostly based on just habits on the gold market. I can't promise it. I can't guarantee that because we do not even know yet how it will turn and how market will start this retracement. But in general, that's just the habit of the gold market, and we can't exclude this totally. But the most probable point and the really reachable point of this retracement is the 1330 area.